Pulver report. It is just after 9 a.m. Eastern Time, Monday the 22nd. This week's trading week, the 22nd through the 26th, we have 502 companies reporting earnings. Some notables that I'll talk about here in just a moment. So let's get started for the day. SPY's up just under $4, $3.30 to the upside, chewing into last week's big sell-off candle. From top to bottom, let me open up another workspace here. Let's go to the SPY. All right, so a big red week. From top to bottom, just over 3%. Top to bottom, just over 3%. 552.29 opening today. Are we going to continue to see pressure to the downside? We will find out. All I'm really watching for is probability of testing last week's low and making some fresh lows, or pulling back, and staying inside the candle from last week's sell-off, and we have inside candle trading. We're waiting for a breakout of some sort. Are earnings going to be a catalyst in order to break fresh lows or break fresh highs? If we break fresh highs, high to low sell-off candle, and that would be a 3% pullback. Is that all we get? I don't know. I posted a video last week on Friday. I sent this out on TradingView, posted it in Twitter, posted it in Discord. I just think that the market is likely due for a 1, 2, 3 correction, or an ABC correction. Benji wants to say hi. Come here, bro. Come here, bro. So I was looking at a 5-wave move. Let me get into my drawing tool here. So from this low, oops, that was back here, sorry. Starting at the October, November low of 2022. So after 2022's correction, 1, 2, 3, 4, 5. So is it that simple? We finally reached our 5th wave. We were wondering, if and when this is going to turn over, similar to what we did in February, March, April. Wondering, and then it finally turned over in April. Lots changed since April as far as market sentiment. Things are a little on the high expectations, a bit rich, a bit long in the skis, so to speak. But sell-off is there. We have a couple of big technical spots. If we have an A, B, C correction, I'm looking back at this high, I'm looking back at this low. So this area is really where I'm interested to, resume buying with confirmation. So I don't just automatically buy, although I would say that I would take some stabs in this 500 zone. And a lot of the hedging that I'm doing right now is in ES and SPX. The VIX, obviously. So the VIX, 1611. Let's look and see if the, if stock prices are going up, this is probably going to fade a little bit. So I'll be watching the VIX today. All right. Let's see who's in the house this morning. Geese, good morning. Angela, good morning. Ruth Ann, good morning. Chris, LG, Jacob, David, Lynn, Angela. Nice to see everybody. Puppers are awesome. Yep. Benji just chilling. Willie, good morning. Denise, good morning. All right. Good morning, everybody. There we go. Okay. Let's go back to the SPY and take a look at the futures dashboard. Okay. So Dow futures up. S&P futures, come on. Come on, chart. NASDAQ futures up. Gold down. silver down, oil down. 79.40. 77.50 is a pretty big spot. We'll take a look at oil gold futures or oil gold silver. We'll take a look at all the markets here in just a second. So, anywho, what I'm really watching is this. We're up a couple dollars today pre-market. Are we going to gap open? Is this a high to low? Do we pull back about 38%, 50%? Find some resistance in here. We'll see if the pressure remains to the downside, or with a big week like we have. Let me see if I can post this guy. There. Earnings week, 502 companies. Some notables: Tesla, Google, Spotify, UPS, Visa, Chipotle, American Airlines, Royal Caribbean. So there's going to be some trades that I'm looking at for today. It's going to be a pretty busy day. I also believe I took some assignment over the weekend. I did any money credit spreads on Netflix. I believe I was assigned on the bull put spread. Netflix was dropping. I have an expiration out to this Friday for the bear call spread. Price is getting closer to that, but I need price to get closer to $600. We're at 639, I think, for the week. So I'll look and see what that does. But notables and probably trades that I'll be interested in watching. Spotify perhaps this week. FCX is more of a copper play, which has been down. I'll keep an eye on some prices where it might be attractive to buy. UPS, depending on the expected move for earnings. Visa, same type of thing, expected move for earnings. Google, Alphabet, most likely definitely playing those. AT&T, I'm watching because we've crept up to $19 and change. That's a good value play with a good dividend. A stock that also could benefit from a lower rate environment. If we have another 100 basis points, 150 basis points coming off in the next year or so, AT&T could have a pretty good value play from the teens into like $25 or $30, which doesn't seem like a lot, but percentage wise is pretty solid. Chipotle had a 51 split, so again, looking to see what the earnings expectations are. Ford, if we have good earnings for Ford, that could be a good time to exit. I own Ford at like $11 or 10 and change with some options after lowering my cost basis a little bit. And then we have some consumer earnings, which would be important to watch. I mean, that's Coca-Cola as well, but mostly the the airlines. We've got American Airlines, Southwest Airlines, Royal Caribbean, which has been at all-time highs, has marched way higher than its counterparts. If you look at Carnival Cruise Lines, or you look at Norwegian Cruise Lines, RCL has been on a rip since COVID. Union Pacific, the old railroad company, SAM is Boston Beer. 3M defensive, Colgate Palmolive defensive. Let's see here. So anyway, I mean, I might throw, I don't know, maybe 5 trades in, maybe 10 trades in, maybe take a look, and we'll do a lot of pricing. Maybe we'll like them, maybe we won't. But Google and Tesla likely on the list for some earnings plays this week. And we might see some big pushes. So that's the plan. So at least a busy week in stocks and options currency wise. We'll take a look at our dollar index and get to some currencies here, but let me finish up on the indexes. So S&P, we're looking at about, wow. I mean, this is a $5.60 move higher on the Qs, and it's kind of the same situation. Do we have a, high to low, lower high to lower low, lower high to lower low? Are we going to hit, last week's low and continue to put pressure onto the downside? Or do we pull back and go after a gap fill? Right? We could pull back into the gap fill, doesn't do any damage, doesn't take out the high or the low, and we trade inside for the week. We'll find out. I think the big story for me is going to be watching to see, does the Dow recover? Right? I mean, this is a wild week. We had this awesome little, I wouldn't say capitulation, but we just had an awesome week where it just seemed like a lot of rotation was happening. Here's a screenshot of last week's performance, 1 week performance from the 15th through the 19th, and it was a massive rotation out of the storied names we've been reading about all week, and what's pretty much saved this market single-handedly with large market cap and big tech. Back to the rally we saw late in 2022 into 2023, most all of 2023 before AI became a thing. It was Mag 7. You sprinkle in some Ozempic with Eli Lilly being down 10%. Costco took a big hit last week as well. but you're starting to see that there's more green sprouting up last week elsewhere. Now, if that rotation goes broader, it does give the IWM a chance this week, which is up about $1 and change. It gives it a chance to see, is this a big rip to the upside, a sell-off point, and this is what I'm going to be watching for. I put in a couple of credit spreads on the IWM around the 218 by 217 or the 217 by 216, one of the two. But I'll be watching to see, how this settles. Do we resume this push to the upside? If we do, awesome. If we don't and we come back lower, then I will reposition with some credit spreads. Okay. So that was a big break and obviously different structure and look to the chart. We go low to high, we pull back here, stabilize, and then look to see if we can test the high. We test the high. If there's still room, 244 would be your all-time highs on the IWM. I love it. Year to date, this has been a big improvement because this thing has been, floundering at 1% for the year. I mean, look at how small. Ugh. As we stretch all-time highs in the S&P and the Nasdaq, look at this: nothing, 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 and all of a sudden started nothing and then rips. Even back here when it was red for a couple of weeks. I mean, just garbage volatility in trading. You're talking $2 to $3 per week. Maybe not that little, maybe $5 or $6 per week, but it looks tiny compared to the size we saw the last 2 weeks of trading on IWM. So things are shaking up, to say the least. All right, keep an eye on the VIX. Especially if we have more downside pressure, the VIX is likely going to make a run. I think that the VIX to 20 is a real possibility. Let me switch this back up here. We have opening bell in about 13 minutes. Go to the charts, SPY, Qs. Okay, I'm wondering, after this move, is this a 1, 2 to the gap, 3 lower? Maybe testing this level here, maybe testing this level here. I'd said in the video that I posted last week, if we have a correction, 7 to 12%. Okay, 7 to 12% on the S&P, 10 to 15% on the Qs. Those are measured moves. Those are pulling back towards previous highs or these April lows. I think this would look better, to be honest, if we pulled back to the March highs as opposed to the April lows. Reason I say that is if we pull back to the April lows, that could also have the look of a topping pattern. Now, we don't have to form a right shoulder. We can just rip all the way back to the highs, but we could be sideways here, and maybe it's a little bit more difficult to justify all-time highs once again if we came all the way back to April lows. Also, as far as a correction taking back some pretty serious gains, I mean, for the year to date, if we come all the way back to April lows, that's a big neutralizer. We'd be starting here roughly, up 24% for the year. If we came all the way back to April lows, we would go flat. Imagine the NASDAQ up 23%, 24% for the year, pulling back to +1, and then somehow getting back to all-time highs again. That would be pretty nuts. So we shall see. The Dow, again, really nice blow-off move. I'm hoping that this is an ascending wedge like I had drawn and we've talked about the last couple weeks, and this ascending wedge is here, pulling back, looking to stabilize, and then looking to go higher again. I would not like to see the Dow break below 385. If the DIA breaks below 385, that looks a little rough. Looks like we could have a topping pattern if that's the case. So let's say that we do come all the way back down here. Well, dead cat bounce, follow through, bigger corrections, but that's not what I'm saying. I'm hoping that this move to the upside pulls back in here, stabilizes, and then starts to work its way. If we're going all-time highs, let's see if the Dow can do it. We've had some big lifts in the Dow with some of their the DIA. Let me see if I can go to sector performance. There it is. So that was 5-day is big red, not the gum, the performance technology minus 5.48. That's in tech, consumer discretionary, or communication services. Big sector overall index down 1.97. So tech got hit pretty hard, negative 5.48. We had some other ones stepping in there. Consumer staples seeing a little bit of love. Energy is a pretty good diversifier when it comes to selling off. It's usually the least correlated. Energy exposure is okay. Financials hanging in there at 1.13. Regional banks had a big push to the upside last week with that kind of aggressive rotation. Industrials pretty stable. Real estate interesting little comeback, but again, cutting rates is a good thing for real estate. 25 basis points isn't making a world of difference, but looking forward to 100% or 100 points or 1% drop, 1.5% drops, that does change the landscape in real estate a little bit. Okay. And year-to-date performance, here we are, 15.41 on the S&P, and the NASDAQ, I think, was pulled back. I think it might be in the teens as opposed to being up 25, 26%. We've pulled back. All right, dollar index. Still watching for support resistance. We held that 104 handle pretty nicely. If we go down to a smaller time frame, and this is a little bit of a bull flag and a pushback up into these highs, just watching indecision on the dollar. Okay, dollar gets a break and goes higher, awesome. Gets a break and goes lower, fine. We will watch and see where that next trade is on the basket. Oil continues to sell off pretty aggressively. This has been, we turned or tipped here around 84 and change, have steadily fallen back down. We have some waning demand in oil, pre-market on Monday. Well, we're going to see if this is if this comes all the way back to a fresh low. That would be a bit of a technical, I'd say, blooper. I mean, that's not what I would be expecting from a move off of major support, sitting here at range highs around 90, having this thing go pretty steady to the upside, pulling back, offering what looks to be a bullish pattern, and have this thing take out lows. I am looking at, it's fallen a little bit more aggressively. If it stabilizes, I'd say the bulls need to step in pretty quick, around 77.50 or so, to maintain this kind of, mid-range choppiness, but really not let the the bears get the upper hand here in oil. And it says here, crude oil add to losses amid China demand concerns. Okay, gold also pulling back a little bit. Consumer sentiment or retail positioning has been long on gold, which is a bit of a contrarian play. So it would make sense that gold pulls back a little bit. If that's the case, does retail does shaking out, around this 2270 support? Does retail stay long? So either a bounce there or a bounce there. Watching gold pretty carefully. If we end up forming a bit of a higher low, so here's a little rally, higher low. Look to see if this has another bump to the upside. The dollar would be the play, right? If gold is going to head higher, I'd say that we're going to see the DXY going down as gold gets higher. But if the dollar holds that support at 104 and heads up towards 105.50, 105.60, gold's likely falling back down a little bit. Okay, silver. So I took some ownership last week of silver of SLV, crunched some numbers. We're trading at 26.41. Let me see here. So I've got some ownership positions, tracker, and I'm going to look at some covered call positions for some repairs very quickly. Scroll down here. So I have K-Web, I own at 26.19. JD, I own at 26.38. SLV, I own at 24.77 and 26.27. And if I took some assignment on Netflix, I'll calculate that out as well, but that would have been a 720 by 715. I still have the long put on that side of the trade, so whatever happens with opening bell, I will close it out for a very small loss. It should have been a risk of like $1.25 compared to a 375 credit. So anyway, SLV, I took the assignment. It was 29, 28, 27. and yeah, 29, 28, 27. So my break even was 28. I collected $3 and change on credits on puts, so that puts my break even at 24.77. On my cash accounts or IRA accounts, $29, $28 assignment, net 28.50. Collected $2.23, brings the cost down to 26.27. So I don't necessarily want to jump in and just aggressively repair silver. I could put a covered call in at maybe $29 to $30, try to get it back to the highs, crunch the numbers, flip it for a couple of bucks. But with the ownership, this is really my goal is to get back to 32 and change, finish a measured move here. If we're still sideways and consolidating and we get a bullish run, I don't necessarily want my covered calls to be in the way, but obviously I can just reposition and buy more. Bitcoin, 67. Bulls are looking pretty good. They came back in a big way to kind of, save that bear trap, which it played out nicely. And so now any type of run up here, if there's any type of dip or pullback on Bitcoin, can we make our next big run to the highs? Maybe there isn't much of a pullback, right? If we run all the way up here and we pause, do we break all-time highs? Maybe. I hope we do. That would be a little bit more exciting on the crypto front. We break above 74. What's next? 100? Maybe. 100 grand. Ethereum, same type of thing. Highs are at 4,800. So is this, up, little sideways, push to the upside? Let's break 4,000 and then possibly hit all-time highs at 4,880. Where do we go from 4,880? Doesn't matter. Maybe 96. Maybe there's a doubling of that. Not sure. But we're going to find out. Copper continues to push way down. This is a huge drawdown from all-time highs. I am not going to do anything crazy with copper unless it settles back into some really strong support. So 370 to 320. Very interested in trading some copper futures down here. But looking at this right now, I mean, if this is a move to the upside and we're coming back for some symmetry, that's a deep pullback. So could we pull back for a trendline retest? Yeah, maybe. But demand, right? Global demand waning. Same thing with the oil. Copper is going to suffer as well. So it's just a big channel, I mean, and there's no stopping copper in here either. I mean, copper looks good in there, but if we're coming off this low to high, I mean, do we go all the way back down to it again and we get a chance to buy copper $2? Let's find out. If we do, that's where I'll be looking. So that's some copper. Nikkei 225, healthy little pullback. Another one that I'd like to see if the bulls are still active here. Let's not let those bears come all the way back down to that low. That'd be a low from April or May. Let me check that low here. That low would be April. So, I say it for this reason. If we, stretch to these highs after having this 34-year catch-up trade, if this is a left tip, center tip, or a center shoulder, are we setting up some type of neckline topping pattern on the Nikkei to give something back? That would put a lot of pressure on the Nikkei. That would certainly stir up some more volatility on the yen crosses. That's if we end up coming all the way back down to those April lows. If instead we're just up here, we're pulling back, we're stabilizing, and then we start to break out and head higher, then we're looking for gap fills, fill these supply zones, and then we're talking about this maybe again at all-time highs. So is this, maybe this, where it gets up to these highs, watching for some type of breakdown. I could see a correction, right? Falling wedge of some sort, or in this case, rising wedge. But this will be a good barometer to watch and see what the yen's going to do. The German DAX, interesting day. That looks like a massive gap lower that's come back in a big way. So up 1.51%. The UK FTSE, a lot of chop here between 81.25 and 82. If it stabilizes, I mean, this is not a bad play. I mean, as long as your stop loss is there, you're looking to see if this will just stabilize and then try to head higher. Are there positive drifts on these instruments like there are on the SPY? There should be, hopefully. If currencies are getting cut, maybe that's kind of boosting everything and FTSE goes higher. China, green for the last 2 days of trading. Barely green today. And then your Mag 7, it is opening bell officially, so I've got to check a couple of things here. Netflix at 6:35. Let me check my accounts, see if I had some. I'm going to put this on another monitor. Just give me a second. Okay. All right. So I had a couple of assignments. I think it must have been on Netflix. So let's go activity, all symbols, FXI. Okay. So here's what I'm looking at. Broken wing butterfly, naked put, 200 shares of Netflix at $720. That's likely the assignment. So 200 shares at $720 is 144K. So I need to resolve that with a credit spread fix. I have the day to do that, but Netflix, that'll give my buying power back. And then I have some futures trades as well that are running. These should be okay. Any other shares I'm looking at? I think I was assigned JD. I have 100 shares. KWeb, some shares as well. I'm just looking to repair. So it could be a quick repair on those China plays. I'd like to stick mostly with options until things look a little bit better. So it should be pretty straightforward. And maybe do like an at the money, just to, if I can get 50 cents to a dollar out of it, that'd be great. Turn it into a little winner. Volatility index still watching. So need to repair Netflix. I'll let things settle in for the morning. Not it's hard to get price right at the first 2 to 5 minutes. Maybe even 10 to 15 minutes. Netflix price is going to jump around a little bit. So what I'll end up doing is I will take the 715 long put in addition to the shares and close that out. Okay. So the goal is I took the assignment at 720. Okay. So that means that my 715 put is up around $75 right now. So if I close out this for $75 plus the shares, let's see what I can get for a close position. 714.20. So what I'm looking for is if I do the math at an assignment, okay, 720, take away the $3.75. My break even is 716.25. I'm going to try to close this down for $1.50. So I need to close this around 714.75 if I want to close both. Okay. 714.75. Make sure I did that math correctly. So 720 assignment minus 375 on the credit spread. Yeah, that's right. 716.25. Okay. So I need to go 716.25. I'll put the pending order in there. Okay. And I think this is whenever everyone's account. So let me just double check this. Let's go Netflix. Yep. Yep. Close 716.25. Okay, that's pending. $716.25. Oops. 716.25. So what I'm doing is I'm just accepting the full loss on the bull put spread, which loses me $1.25. So I'm just going to set that for right now, 716.25. And I'll see if I can turn the bear call spread into a small profit by the end of the week. If price continues to push lower towards 600, then that should be the case. That was interesting. So Netflix here. So you assigned me 100 shares at 720, but not both. Fancy that. Okay. So I'll close out this and this. Should be the same price. That's weird. So I have 100 shares assigned. So here and here. This needs to be a one contract close. There we go. 716.25. Okay. So Netflix is in. Now I'm going to get some covered calls in on the China plays. So that'll be my focus. If price goes up a little bit, I'll just be watching that spread overall. Should be a loss, and then I'm going to get to some pretty heavy earnings trading for this week. Probably looking at the market start out pretty neutral. Take a look at Google and Tesla. Start pricing out some options, and just see if I can get. I mean, I like probably 10 plays this week on earnings, but I want to see just I'll stick to the method, stick to the process, and price it out. Do they hit the expected move? If so, great. Do they go beyond the expected move? Okay, fine. Trade it inexpensively, be cost effective, and I like some of the earnings plays this week because it's a lot. This will be kind of what the market is watching. I mean, things got shaken up over the weekend with President Biden dropping out of the presidential race. If the Democrats are putting Kamala Harris in as front runner, okay, fine. That shakes things up a little bit. I don't know if that's enough to persuade the base to change the voting at all, but um, tracking 2024 presidential election. Yep, this is the website I was looking for. 538. It's a weird website name, but let's see what this says. Okay, let's have a quick breakdown of this. So as of July 21st, SoCal research 43 to 51. General election. General election, New York. Hmm. Okay, I'll have to dive into this a little bit. Favorable opinion. Voters want Republicans or Democrats in Congress. How populous Joe Biden? All right, let's go. General election. Okay. So this hasn't updated yet. Trump 43.5, Biden 40.2. Trump with a small lead there. RFK Jr. 8.7. And I don't know. We'll see. So all right, 538. I just remember that was the spot. All right. Any other charts? Any other questions? Currencies, we didn't really do a lot. I guess we'll look at the Japanese yen. Dollar still holding support and range levels. Aussie CAD's pulling back. That's fine. Let's look at the yen crosses. Anything wild and crazy happening here? Some more follow through on the yen. Okay. Japanese yen sneaking up there with some volatility today. Aussie weak, New Zealand weak. Okay. I think that a bit of a sluggish China is dragging, those partnering countries and currencies lower. Uh, Yen strength. All I can say is if this is going to happen and continue to happen, if we're getting a big unwinding, then my FXY trade is looking better, looking way better, but still a long ways away. So could this be a pullback from, inner trend line to outer trend line? Yes. If there's going to be a spot for this to bounce, it would make some sense we bounce in here. We don't necessarily take out the intervention lows that we had back in May. That was May, correct? End of April. End of April intervention, and then right here that we saw, early July. So if we come down and bounce off the trend line, trend followers probably excited for that trade to show some confirmation, tight stop loss, then have a nice reward to risk trade to the upside. Okay, could be that easy. But if we come down in a big way and break this trend line, take out this low, then we might be looking at a much bigger topping pattern on some of these yen crosses. Again, I wouldn't mind. I wouldn't mind. CAD yen, a little bit of follow through. Swiss yen still sideways. But if this sets up with a bear flag, that could be pretty good and a lot of room to the downside to come back to that trend line. That would be a trend line around 169 or 168 from 176. That's a good 600 to 700 pips away. Not too shabby. Euro yen sitting on the trend line. We'll see if it does any damage. Pound yen. By the way, I've got to ask for traders out there that are in yen crosses, is this correction enough for you to be in profit? Everyone that's been holding some, I know traders out there have been holding, shorts on the yen. I know a lot of traders have said, when's the pound yen going to turn? Well, that means that you're in the pound yen in a drawdown. So if this move from 208, to 202, if that 600 pip pullback is enough, I hope it is, or at least enough to move to break even or better. But, this trend line break inner to outer, we got to look for a bounce. It ends up breaking lower. Awesome. I'm hoping you're just moving stop losses and going with this. Okay. So we'll have to watch, but still some drama in the yen crosses. New Zealand yen has been just falling in a straight line, 99 all the way to 93. I should say just under 94. So we've dropped about 500 pips on the New Zealand yen. Another one to take note of. I mean, this has been a pretty straight drop. We fall into this area if it shows some signs of bullishness, stop loss below, and maybe retest highs. So again, trend traders probably watching that level, but I wouldn't expect that move necessarily. This could be falling enough that it does some damage. If we do pop up here, that could be putting in a lower high, and then the follow through would be out here. That's the open space. By the way, this drawing was months ago. So this little shaded zone, that's like, looking to sell, getting bearish, stop loss area. It, stretched up and didn't necessarily run it. I mean, if you look at a weekly chart, that would have been a spike like so. So weekly chart didn't invalidate my and really 100 was my stop loss, like a big round number at parity. So anyway, 500 pips on the New Zealand yen. Dollar yen, a little bit of follow through. Dollar yen, Swiss yen are looking pseudo similar. Is pulling back slightly towards like 158. There could be some room for additional unwinding of this yen trade. So gotta watch it. Other charts, other currencies. Let's take a quick peek. Aussie CAD pullbacks are fine. Swiss crosses, still a little bit of waiting. I'll just say that on the Swiss pairs. Swiss has been stable. CAD Swiss, Euro Swiss, not much follow through there. Pound Swiss, just waiting. New Zealand Swiss, probably the worst performing one. Yep. So this one's been the least pleasant. Watching lows or watching lows, and I'll just be patient. If this comes all the way back down to like 5,000, I'm looking for a reversal pattern. I'm still going to take New Zealand Swiss to the upside. and dollar Swiss. Looking for price action on the right-hand side of the trend line. We're all in a big pullback zone right now based on fibs. So 382, 50, 618 zone, and right side of the trend line if we get it. Again, it's a play on the Swiss, not really saying that the dollar is going to get stronger necessarily, but that the Swiss gets weaker and offers up hopefully some consistency with the swap scenario. All right. Any other requests, any charts, anything you'd like to take a look at? Otherwise, it's going to be a busy day for trading, which I'm totally fine with. Did have a couple things to talk about just really quickly. I'll share this with you. Caught up on some content this weekend. Market breadth. It's worse than almost ever. The annual S&P contributions of the 10 largest weights during positive performance years. 2007, right before we had a great financial crisis, we had the top 10% as a total of the stock performance, 78.7%. Okay. So the top 10 was 78% of the performance was because of the top 10 stocks. Very narrow, highly concentrated. 2024, 77%. Now, the S&P performance for this year has been that 14-15 after a pullback, okay? But the S&P performance as a whole in 2007 was 3.5%. Big difference, okay? Now, this does give the market an opportunity to broaden out. I think that's the important thing, is that this market has to broaden out, so it's not just all about those top 10s. Let's go back here. And where's my other one? Okay, 56% of years in the S&P 500 peaks in either January, December. So what this is showing is most of the time the highs of the year are in December or January. Like staggering amount. You know, highs of the, I mean, these are like, this is November. About 10% of the time we have highs in November. Over 40% of the time it's December, and over 24% of the time it's January. So those open interest levels, those, you know, big options expirations, they call them Vanna charms, gamma squeezes, whatever you want to say, 56% of the time, those highs are happening in January or December. So that must be like 48 and 14, or something along those lines. It's a little tough to tell, but more than half the time, your peaks, your tops, are happening in December and January. So if this market still has destination higher, you know, we could pretty much look at a runway from now until the end of the year trying to finish higher. Okay, higher in December, higher in January, before the market really turns, and that is also a testament to seasonality. And then lastly, this one here. Sorry about the blurriness. I took these on my phone and sent it over. So the S&P 500 average performance after new all-time highs, comparing the S&P versus the equal weight. Okay, so what's important is the equal weight needs to basically break highs. Okay, if the equal weight can break highs, which is RSP, we're not that far off. Okay, now this little breakout right here, we're not that far off, but poking those all-time highs, that's a good sign. Okay, but what we need to see is that we get back to those highs and see the equal weight is catching up. So if we want to see market breadth, if we want to see the catch-up trade, we want to see equal weight. So your RSP, your QQQE, and your IWM, those would be the best places to see that the market is actually broadening out. Right? So that would be a healthy sign of a bull market, because flows are going into a little bit of everything as opposed to all into very few things, which would be your, you know, your Fab 4, Mag 7, top 10 type situation. Okay. Gold. Yep. We took a look at gold. So gold and silver. I'd said that, you know, retail positioning on gold is tilted to the long side. So I think that gold is going to probably pull back a little bit towards these lows at, you know, 2270 again. That might be enough to kind of rattle out some retail traders. but I'm still looking at, maybe trend line support to hold and go up. So I still like gold. That I certainly want to have it in my portfolio. I think gold and silver both are pretty good trades. So I'm not just buying gold blindly. I was buying gold in here. It's been up. If we have a higher low, that's fine too. If the dollar gets weaker, gold's probably going to be a nice beneficiary of that. If the dollar gets weaker, same thing with Bitcoin. But right now, I think that gold is still kind of range bound. So, peaks around 2450. We were just shy of that 2500 mark, and support pretty firm around 2280 to 2270. Silver, so far in this area, some sideways, and we will see if that kind of 2850 holds on silver. Really, really strong support, $26. I just want to see if there's a resumption. If we hold here, stabilize, head up, this is sideways until hopefully it breaks and goes higher. Okay. All right. For right now, I think I'll let you go for today. Let me see if I have some quick updates from Opening Bell Daily, perhaps. Let's see. Morning Brew, Start Daily, Snacks. Uncharted territory. Option demand for small caps has gone haywire. Yes, we know that. Let's see. What else? Rising expectations of rate cuts and Trump victory boosts U.S. smaller stock. Going small, rate cuts, tax cuts, bonus. Let's see. America's top wireless providers, Verizon, AT&T, have earnings today or this week. Let's see. Coca-Cola, Keurig, Dr. Pepper, Pepsi, Google, Tesla, earnings this week. CrowdStrike, global little update that says messed up. Let's see. CrowdStrike, 23% from flights from Delta, 13% from United, 20% from Spirit canceled on Friday. Following initial May approval by regulators, spot Ethereum ETFs are expected to start trading as soon as tomorrow. Now issuers like BlackRock, Fidelity, VanEck are competing to offer the lowest fee. Netflix streamed past expectations after its global paid subscribers grew 16.5%. Cheaper ad tier saw 34% subscriber growth. Signups to slow this quarter. All right. Wow. So I'm going to take another screenshot of the earnings plays. This has a little bit more than that notable list that I talked about earlier. So let's go here. So today, Verizon, Cleveland Cliffs, Logitech, Brown & Brown. Tuesday, Spotify. There's a lot on Tuesday. Tuesday, Wednesday, Thursday, just the bulk of the week. Lots of notables there. Okay, I'm going to let you go. Thanks for being with me today on the Pulver Report. Happy Monday. Let's have a good week. I'll be live, back on, actually, this week I'm going to be out of town Thursday, Friday. So possibly a video update, just depending on where things are at. My expirations for my earnings plays are likely going to be out not through this Friday, but I'll probably go out to the August 2nd expiration. So this week is going to end the 26th this Friday. Next week, we wrap the month up on Wednesday, and then Thursday, Friday should be a non-farm payroll Friday, and I'll have some earnings expirations there as well. So, all right. Before you go, if you are watching live or you're watching this recording after the fact, it always helps to hit that thumbs up button. Please do that. Support the channel. Get the old search engine optimization. Let my videos pop up here on the right hand side. Also, this week I'll probably post a video on TradingView. Share that with my Discord community. Share that on Twitter. That's a nice little feature that wasn't there. I thought TradingView was doing away with videos. I think they stopped doing live streams, so maybe they're no longer doing live streams. But I can go to publish. I can record a video idea. I think that's a little bit more actionable than just publishing a trade idea. So I just like the fact that there's big user base for TradingView and publishing little helpful videos. Hopefully. Market direction is important. What we're watching is pretty important. We're going to see if this market's, shrugging off a lot of the volatility from last week, Um, and watching to see, do we break the lows? Do we break the highs? Is it an inside candle week? We're about to find out. Okay. Happy Monday. Let's have a good week, everybody. I'll see you all soon. Thanks. Bye.